Our view is that the Canadian dollar will continue to weaken. That's been a bit of an out of consensus call and based on some of the more Canadian dollar negative factors. So Canadians' lack of competitiveness on the global export market. We've got a higher interest rate environment making economic growth a little bit less attractive. And we've got protectionism out of the US, which makes trade a little bit more difficult for Canada. Now, more recently, we've seen some economic growth begin to weaken in Canada. It's the positives that the Bank of Canada were looking for, so improvement in exports and investments, are not feeding through. And so that's got the market expecting maybe fewer interest rate hikes from the Bank of Canada than were previously expected. So we're starting to see the market consensus and the market sentiment shift a little bit more towards us and towards a weaker Canadian dollar outlook. Going forward, there are still reasons to expect that the Canadian dollar can weaken further. That has a lot to do with some of the negatives being very long-term factors. So in the interim, we're relying on a weak Canadian dollar in order to help that economic adjustment. It also has to do with some of the recent headlines that we've seen. So we've got the Trudeau SNC-Lavalin scandal. We've got doubts about whether the US-Canada-Mexico deal will get passed. And there's questions raised about the future trading relationship between China and Canada based on the extradition of a Huawei executive. So any of those things could easily push the US-Canadian exchange rate up to the top end of our sort of 130 to 140 range, which is what we're expecting. Our 12-month forecast is at 137. That equates to about a 2 to 3% weakness in the loonie.